about the market today. And what better perspective can we get than from Christopher Estevez from the Samaritan group at Movement Mortgage. You guys have met Paul before. He came into the office with Annie. We did a big Zoom meeting. And he explained to you a little bit about his company, a little bit about what's going on in the market, some of the things that they offer. And Christopher is here today to keep us updated with the market and tell us about some of the new stuff they have going on. So welcome, Chris. Take over, buddy.
Thank you for having me, Ryan. And really appreciate meeting all of you. I didn't realize it was going to be such a big group. So you guys got me a little nervous, man. I'm not going to lie. But Ryan asked me to come on board here and just talk a little bit about maybe some questions that you guys may have about the market. As he mentioned, I'm with the Samaritan Mortgage Group. You guys met my fearless leader, Paul Massey. I mean, he has a wealth of knowledge, over 20 years of experience in the industry. And that's kind of why I've kind of attached myself to him to try to just learn as much as I can from him as well. Samaritan Mortgage Group, man, what Paul has done with this branch is amazing. And I attribute a lot of the success that we're having with our CRM, our client relationship manager. We use a CRM called Candid. It's the same thing as Salesforce. Not sure which one you guys use, but it is really intuitive. Essentially, the second we put someone on in our CRM, it automatically creates tasks just to make sure that we don't allow that lead to fall through the crack. I'm not sure if you guys have referred business to somebody in the past, and then there's that initial intent to get in contact, but then, you know, a day or 2 or 3 days go by and then there's no follow-up. Well, that's kind of what I feel like has made us the most successful. Not sure if you guys have heard this before, but I want to say it's like 80% of commissions are earned after the 7th attempt to follow up with the client. And I'll tell you this, man, since I got the CRM, it is amazing. Aside from that, this thing does some really cool things, edible pre-approvals. So you never have to wait on your loan officer to submit that offer at 2 o'clock in the morning when you guys finally have some free time. You guys will actually have access to a portal where you guys can go in, see your pipeline of all the leads you sent to us. It'll also tell you when we last contacted them. And then again, if you do need a pre-approval, you can just download it from the portal itself. So a lot of our referral partners kind of use this as their own CRM. Again, this thing is super powerful. Annie might have also talked to you guys about our 5 touch points every single year post-closing. I don't know all of them off the top of my head, but we also use Canary. I think that's a pretty big thing because it also updates us and your client and puts you in front of them at any time they're planning on selling. So they get their annual mortgage review. They get to ask a series of questions. And one of the questions that I love is, hey, has your family increased in size? And are you looking to make a move? Those 2 questions, you get forwarded those answers, and it puts you in front of the client again for that next sale, if they need a list or if they need to buy again, whatever the case is, or maybe they need a refinance to buy, we'll take care of that. So honestly, since becoming a loan officer here at Samaritan Mortgage Group, my business has grown dramatically, and it's all because of our referral partners in the CRM.
Great.
Yeah, go ahead, bro.
Chris, tell us what you're seeing out there right now for like buyers and sellers as far as applications and stuff like that. What's business like?
Yeah, so honestly, business has picked up, I would say since middle of January is when we started seeing things pick up. Last month, February, is the shortest month of the year, and I received more apps, and so did Paul in the month of February. Since we haven't seen this many apps since June of last year. And if you guys remember, June was still a really hot time for us. So it seems like the interest is really up there. As you guys know, rates were kind of down towards the end of January, and then they kind of picked back up a little bit after Valentine's Day. But we are seeing a lot more activity every single day. We're getting more and more interest, and we're getting a lot of those people getting under contract right now. So there is a lot of activity. I would compare this to kind of middle of last year, if you guys want some kind of comparison.
Are you seeing, what are you seeing the, asking price to contract price, stuff like that? What are you seeing?
Yeah, good question, Ryan. So I've seen a mix of a few things, right? There's no secret. There are some listings out there that are just overpriced. And what I'm noticing is that on those cases, the buyer is able to, or buyer with their agent are able to negotiate the price down. And in some cases, they're able to negotiate the price down and get some kind of concessions. But a majority of the contracts that I've seen recently, I have the seller giving, 5, 6, 7, 10,000, 12,000 for closing costs, which is allowing buyers that maybe a little strapped for cash to actually get into the home, right? Because as you guys know, the last 2 years, the sellers have been making all the demands, right? It's like, hey, how much are you willing to pay over asking price? And don't even think about asking for closing costs because I'm not going to give you any. So it kind of priced people out as far as capital that they needed for the transaction, where they might have needed 20, 25. Now they might only need 13, 15,000. And if you couple that with a down payment assistance program, we actually might be able to get them in the door with no money at all, or maybe $1,000.
Okay. So you're seeing more buyer negotiation, the market kind of swinging back toward where buyers can negotiate a little bit of stuff. What are you doing to help them? Obviously, their biggest objection that our agents see is interest rates, and the biggest reason for dragging their feet is interest rates. What do you recommend for those people?
Yeah. So, I mean, let me just first leave with this. Like, there's no such thing as a perfect market, right? Like, people said that 2 years ago was the perfect market, but because interest rates were really low, and they were like, oh, this is the best time to buy. But if you really think about it, the people that were making the most amount of money from interest rates being low were the sellers, right? Because rates were low, they were able to sell for the top dollar in the community, let's just say, right? Now that interest rates have gone up, it's actually putting the demand in the buyer's side, right? Where now you could actually negotiate, like you just said. And in my opinion, it's a lot more pleasant for the buyer. And not to mention, a lot of experts think that these higher interest rates are temporary. We think that maybe the second half of this year, we might see interest rates under 5%. So my advice to everybody that comes in contact with me on trying to purchase a home is, hey, this interest rate is temporary, right? Either way, in about 6 to 8 months after you close, you're going to want to refinance, because by then rates should have pulled back and you're going to have a better opportunity. So you're better off buying a house now, stomaching a higher payment for the first 6 months, and then refinance to that more comfortable monthly payment. And I always say this as well, there is no competition on a refinance, because what do you think is going to happen when rates pull back? Everyone's going to come into the market, and then we're going to go back to bidding wars, right? So again, there's no such thing as a perfect market. So you really have to work to articulate that to the client and make sure that they understand that, hey, this is the best opportunity for you to get into a house if you're strapped for cash. Obviously, if you have 20% plus to put down on a house, it really doesn't matter. You can pretty much buy at any time. But for people that are trying to get in with low down payment, home ready, home possible, programs that we could use to help people get into the house is Hometown Heroes. I know that was a popular program last year. We also do bond programs and government grant programs that helps with the down payment. So we're able to kind of offset that higher monthly payment by saving them cash up front. We could also do what's called a 1-0, a 2-1, or a 3-2-1 buy down. Essentially what the customer is doing is temporarily paying down, or temporarily getting a lower interest rate. That money doesn't go away, right? It sits in their escrow account. So if and when they do refinance, they're actually going to get that money back. And think about this, guys. If you get the seller to give you $10,000, $12,000 towards closing costs, and your buyer has enough money to cover the down payment and closing costs, you can use that for the buy down. And when they refinance, your client is going to get a check in the mail for whatever they didn't use from that buy down. So essentially, you're refinancing for free, right? So this is huge, guys. And if you guys need, I think I need some spreadsheets for this one, but it would be, to me, it's a no-brainer. You buy now when interest rates are high because you can negotiate your term, you refinance later, and then you just do it again, right? And that's how you're able to kind of get ahead of everything and kind of beat people up, because you always want to buy when things are at, I would say, their lowest price, and when they're expected to come right back up. I would say if rates do pull back by middle of this year, we're going to see some prices start soaring. And I think experts are predicting in Central Florida about a 6% increase this year as well.
Great question. I was gonna ask that, what you thought would happen, because if rates do come down, our inventory, as you guys know, is not that high. You would think it would be higher after the buyer demand slowed down, but it's not that high. And if they drop the rates again, buyer demand is going to go through the roof again. And these prices are going to have to, it's going to put pressure back to a seller's market quickly. Again, if the rates go down, like people are saying, you know, you and I don't know for sure, but that could happen. Tell us more about what you're seeing. Explain to us a little bit better the buy down. Does that have to be seller money?
It doesn't. It doesn't. You could use your own funds, right? So what on average, I would say a 2-1 buy down costs a client about 2%. But essentially, it's just what you would have been paying in interest compounded over 2 years, right? So like I just did an estimate for someone for a $440,000 loan amount. And the 2-1 buy down was about 9K, right? Essentially, for the first year, they were paying about $560 a month less than what they were going to pay, right? Because let's say I was able to get them in at a 6.5% today's market, they would have a 4.5% interest rate their first year, right? So that's a difference of about $560. You multiply that by 12. If my math is working this morning, it's about $6,000. The second year, their rate would go up to a 5.5, and that was going to save them about $250, and that's about $3,000. But again, whatever you do not use from that buy down, your client has two options. They can get a check because it's in their escrow account, or they can use that and apply that towards the principal so their loan amount doesn't go up when they refinance. So essentially, they're refinancing for free, and that's why that program is so much better than doing a permanent buy down in this moment. Because with a permanent buy down, once you spend that money's gone. It's in your closing costs. There's no way to get it back. And let's say, for example, rates right now on a conventional, let's just say it's 7%, and you buy it down to 6.5, that might cost you 1 or 2 points. Well, 1 or 2 points on a $400,000 loan amount, that's $4,000 to $8,000. That might only save you $120. How many months do you need to save $120 to recuperate that investment? It's probably about 5 years, right? So that's why in this market, when we're expecting rates to come down, I actually advise against a permanent buy down. And I'm actually putting forward that temporary buy down because that's the most bang for your buck. And your client's able to recuperate that money back. So they enjoy that lower monthly payment that they want. And they get the money back if they don't use it all. Obviously, if rates don't pull back, no harm, no foul, and rates go up, you're still at a 7%, and rates go up to 7 or 7.5%, 8%, you still got a better rate than them as well, right? So I really think the temporary buy down is the way to go in this market.
Okay, we got a couple of questions in chat. What's the name of your CRM?
It's really Salesforce, but what we did is we had somebody make Salesforce for loan officers. So it's called Candid, CANDID, Candid.
Candid, okay. And we have Martha. I'll go ahead and let you ask your question. She's got her hand up.
Yes, good morning. I have a question in regards of how you're, I guess I'm asking if there's another way to kind of explain this to the clients about the rates if they go down, because you remind me of when the crash went back in 10 years ago, and this is how the lenders were saying it. Oh, do it now, things were gonna get great, buy at the higher interest or whatever, or lower interest rather, nothing's gonna change, you refinance, and then that never happened. So I personally have an issue approaching that conversation because I feel bad that what if rates don't change and I push this client to buy in a higher rate and the rates never came down for them to refinance. Is there another way to kind of not go too deep into that, to kind of let them think about this more? Or I'm not sure how to address this conversation with my clients.
Yeah, and that's a fair question. And I'm going to be honest with you. I don't think it's fair for you guys as agents to speak about rates, right? I don't think, you know, that's not, I don't want to say it's not your job, but that's our job, right? We're the mortgage, quote unquote, professionals, right? Your real estate agents, they're good at understanding markets, knowing where you can get your home that meets that client needs, right? So if you don't feel comfortable having that conversation, I can. What I will tell you is the reasons why we're expecting rates to fall down, right? So as Ryan said, inventory levels are still under 2 months, if I'm not mistaken, Ryan, correct? We're still under 2
months. About 2 months.
Right? Or around 2 months, right? So in order for prices to fall like it did what was it like? I mean, it was a little more than 10 years ago, right? It was 2008, right? That's what I'm assuming what you're referring to.
Right, to 2007 to be exact.
Yeah. Yeah, around that time. I remember my parents owned the home at that time, and it was a rough time, right? But what people forget is this. We had a surplus of inventory. There was more than 7-8 months of inventory in the market. And what's happening right now is because interest rates are so high, sellers don't want to sell, right? They're saying, hey, if I sell, I'm going to lose that 3% interest rate that I got a couple of years ago. Or, hey, I just refinanced a 3% interest rate. I'm going to walk away from this to a 7 or a 6.5. That doesn't make sense. So our inventory is coming from builders. And I don't know if you know this, but about 1% of our population ends up moving in together, right? These are new established homes every single year. And essentially, if you follow MBS Highway, they talk about how many new home buyers are going to be coming into the market. And the amount of homes that are being built here in Central Florida compared to how many new home buyers are coming into the market is actually negative, meaning there's about $100,000 home shortage compared to how many new home buyers are coming into the market nationally. And that's actually a little bit more aggressive here in Florida because there's so much demand and people keep moving here. Okay. So because of the fact that we have low inventory level, that's why a lot of experts don't see home prices falling. Okay. The other thing is interest rates follow inflation. And here's what I mean by that. Right now, rates are lower than they were in November of last year. I don't know if you guys remember what rates were in November. I remember quoting someone a 7.5 for a primary home with 20% down. Okay. Today, I would quote that same person a 7 or a 6 and 6.75. Not much different, but guess what else has happened since then? The Federal Reserve has hiked has hiked the federal funds rate by about 150 basis points since November. So what that tells us in the market is interest rates do not follow the Fed's funds rate. They follow two things: the 10-year bond yield and inflation. As inflation pulls back, and we're seeing inflation pulling back, interest rates are going to follow suit. Remember, at the end of the day, it's the investors that dictate the rate, and what they're trying to do is protect their money. If they see inflation pull back, that means rates will pull back. And because we're not seeing a surplus of inventory entering the market anytime soon, prices will not fall. Prices will stay where they're at or keep exceeding. Here in Central Florida, we're expecting a 6% increase in value, 23% increase over the next 5 years.
Fantastic, guys. And I think that the most important thing is not to answer that question as Chris did there. You're not going to be promising anybody anything. And what you saw back in 2008, and I just posted some interest rates on the right side there. What you saw back then, 2007, 2008, was what they call ARMs, adjustable rate mortgages. And those were going out with people that should have been getting secondary financing, like they would call it in the car business. Their credit was worthy of 10% interest rates, but they were giving them 4% for 3 years and then adjusting to whatever the market rate would be. The rate went up a little bit, but that pushed people over their edge. I don't know if you remember this, but they were doing what we call affectionately liar loans, where, I work at Burger King and my wife works at Wendy's and we make $250,000 a year. And, just trust me. Stated income loans is, I think, was the technical term for that. But we just say what we make, and they were believing it. They were loaning us 106%, so we could have a condo, 2-bedroom condo in let's say Metro West of Orlando, and we could have a 2-bedroom condo there for $1,100 a month, or we could buy a house in Groveland or Chuliota for $250,000, get 106% financing, leave the closing with money in our pocket, and our mortgage would be $1,050 a month instead of $1,100 we were paying for condo. We got a 3.2 in a nice little town somewhere, right? That's great for as long as I can make that payment. But then as soon as the market, everything crashed, not just the real estate market, everything crashed. A lot of people lost their jobs, and now I can't make that payment, and now my interest rate is going up next month, next year, or whatever. And so that's why we were flooded with foreclosures and short sales and everything else. So there was a lot more to it than just people lying about interest rates. I don't think that was a lot of it at all. I think if people were talked into adjustable rate mortgages, 106% financing, et cetera. So they had absolutely none. And what we're going to see, and what you guys are starting to see now, is people, if we do go into a recession of some sort. I don't know if you guys saw the Florida Realtors email this morning. The headline was, Floridians are enthusiastic and optimistic. But then the next two stories were, it looks like we're heading into a recession because the Fed keeps raising interest rates. And overall national consumer confidence is down. So it was all negative except for the headline. And if we do head into a recession and people do lose jobs, at least right now, unless they bought last June, they are going to have equity in their house, and they're going to need to sell, but they're not going to get foreclosed. Right? They're not going to let themselves be foreclosed. Even if foreclosure starts, they're not going to let themselves be foreclosed because they have equity. So they're going to want to sell. Right? They're going to save their credit. They're going to save everything by selling before that happens. And so make sure you guys are on top of that kind of stuff. Get the pre-foreclosure list from RedX or wherever you can get them. I know some of the title companies we had in here give you guys the tools to get those. Jen Pereira was in here with something, and then Heidi Foster was in here with something. You guys have seen those before. Get some kind of tool to get that kind of stuff if you guys are interested in that, which you all should be, because those are traditional sales. It's what you guys do. Everybody in here pretty much does that. Any other questions for Chris?
I do want to say one more thing, Ryan. Also back then, when everything did crash, banks were not escrowing as often as they are now. They sometimes would, but another reason why people were defaulting is because when the tax bill would come due, they would say, what, I have to pay taxes? And then keep in mind, when we qualify people today, we're qualifying them with escrows, meaning insurance and taxes, and in some cases, mortgage insurance. Mortgage insurance wasn't a thing back then either, right? So if a buyer does default, that's what the mortgage insurance company comes in and they make it good, right? So that way the bank isn't gonna experience what they experienced then. What that was a financial crisis. And the reasons why prices fell the way they did is because the only way you could buy a home was cash after everything that went down. There was a lot of reasons why that happened, but that was the reasons why prices fell, because it was very difficult to procure financing after everything took place. Okay, so I know a lot of people are saying, hey, this looks a lot like that, but in my opinion, a lot of factors are very different in this market. That shows that even if we do go into a recession, home prices should still be a very stable asset over the next 5 years.
Fantastic. Any other questions for Chris? Chris, this is usually when I give them like 3 chances, and then they don't do it on the first 2. And then right before I say this is the last call for Chris, and then somebody will come up with something.
I was going to say that either I did really good and no one has questions, or I did really bad and nobody wants to ask me any questions. So,
well, the only people sleeping are the ones with their cameras off. So the rest of us are wide awake, it looks like.
Yeah, so. I am seeing what Brian Capu, I hope, sorry.
Capo,
Brian.
Yep.
Capo. The 10-year treasury rate is the yield received for investing in the U.S. government issued treasury securities that has a maturity of 10 years. The 10-year and treasury yield is included on the longer end of the yield curve. By the way, the yield curve is inverted right now, guys. That's important to know. The reason why that's important to know is because Fed's funds rate only affect the 6, the 1, and the 2, doesn't affect the 10-year. So it goes back to what I was saying about interest rates not following the Fed's funds rate. They follow inflation in the 10-year bond yield. So this is solid, Brian. So good job here sending this out.
Hey, Christopher, what is the 10-year bond right now? Is it? I heard it was approaching 5 yesterday.
Yeah, so there is a slight difference, right? They need to pad in some basis points difference. I haven't checked it today, but I want to say it's around 5. We're probably pushing around 6 right now, or getting closer to 6. I would have to check and get back to Ryan, or we can actually, I can just Google this right now. 10-year bond yield today. And of course, my internet wants to be slow. Okay. It's at 3.992. So it's up like 7 basis points right now. So it's usually about a 200 basis points difference from rates are usually about 200 basis points difference from the bond, right? So what the market is doing right now is after the jobs report last month on February, I want to say it was February 10th or February 14th, the Fed came out and said, hey, we're going to hike rates we're going to keep hiking rates. So what they're doing is they're padding in a couple more price increases before the rates start falling. But again, experts say May 10th is when we're going to start seeing rates kind of come down. By July or August of this year, some experts, specifically the guy that I'm following and quoting is Barry Habib. If you guys don't know him, follow him, man. This guy is a genius. He's won the Crystal Ball Award the last 3 years, if I'm not mistaken, for being able to accurately predict how interest rates are going to behave. But he's calling for rates under 5% by the end of this year. Wild. Because if we get rates under 5, all of you guys are going to make a lot of money. I'll tell you that. All right. You're going to have sellers wanting to sell. You're going to have buyers wanting to buy. And the only thing that you're going to be complaining about is like, oh my God, I have so many offers to put in. Right. So definitely a good time right now, because you can get in before the mad rush of people trying to outbid everybody and not have any competition on the refinance aspect, like I always say.
All right, guys. Thank you, Chris. Any more questions for Chris?
I don't have a question, but I have a well, kind of like a question. I remember that reading in some article, I don't remember the name or the source. I wish I could. Saying that the CPI report came out, and due to that, the Fed was going to decide to increase the interest rates. So it's like contradicting what he's saying right now. According to that article, it says because of the CPI report, then they say that the Fed was going to increase the interest rate around May, and that it was going to stay for around 1 year. So I don't know if you have any comments or anyone has any comments in regards to that.
Who I just want to be able to say your name. I'm sorry, what was your name, ma'am?
Sonia.
Sonia. Okay. Hey, Sonia. Thank you for that. So keep in mind, interest rates follow inflation and the 10-year bond yield. Okay. What the Fed does not impact the 10-year bond yield. They've proven it. That's why the bond yields are inverted right now. The bond curve is inverted right now. Okay. What happened with the January, because the report that we got in the middle of February was for January, right? So remember, these things happen in a lag. Okay. So what happened with the jobs report, right, which was also going to impact the CPI report, was that they made an adjustment for all of last year. Essentially, they found a bunch of jobs that weren't reported during last year in the jobs report. So instead of putting them and allocating them to the month when those jobs were created, they lumped them all into the month of January, which showed an increase in jobs year over year. But in reality, we lost, I think, about 300,000 jobs over the last, I don't know, about 6 months, give or take. Okay. The other thing that came in with the CPI, and if you look at inflation, it's actually come down probably consistently over the last 6 months as well. But January is when they lump in the shelter costs. And because everybody's rents went up, shelter costs came in high. And I believe shelter cost is about 1/3 of the CPI report. Okay. So essentially what happened was the CPI report was still showing that inflation is coming down, just not as much as the market was predicting. That's why rates kind of picked back up. But as we continue to play this out the long game, you're going to start seeing that rates are coming down. Remember, things don't go down in a straight line, right? They're going to start coming down, but then there's going to be a month where it kind of picks back up, which is where we're at now. And then they're going to come back down again. We're actually expecting some good news from the CPI report this month. April, we might see it pick back up, but in May, when we get the April numbers, is when we're expecting to see rates really start coming down.
Okay, guys, any other questions for Chris? Chris, you also speak Spanish?
See.
That's
Yeah,
a yes for you guys.
Yeah. So anybody that you guys need help with speaking Spanish, I work with Paul. So and if you have a Spanish person, I am that person. I also have a junior LO that operates under me. Her name is Saida. She's 100% Spanish. My Spanish is like I told Ryan earlier today, it's a hobby. My parents are Hispanic, so I grew up speaking Spanish with family. So it's not as fluent as it is in English, but it gets the job done. Okay.
Great. Thank you. Any other questions or comments, guys? Any more questions? Going once, going twice. All right, Chris, thank you very much for coming in. Guys, we're going to hang out here for a little bit if you have other questions and stuff. But Chris, thank you so much for coming in. Thanks for the market update. Thanks for all the information. I really appreciate it.
Yeah, it was a pleasure. And then also, guys, remember with Samaritan Mortgage Group, we are very big on charity. Last year, we donated over $100,000 by donating $200 per closing. So if you want to help the Central Florida market through charity work or through lifting trash out of the ocean, all you got to do is send us your clients. That's going to make sure that that money gets reallocated to the charities that really need it. Annie can speak to this way more than I could. But I mean, have a conversation with her, see which charities you're very passionate about. And I'm sure for every single closing that you do with us, we'll donate that money to that charity, which I think is huge. I always say big things happen by taking small steps in the right direction, right? That's what we're all about here at Samaritan Mortgage Group.
All right. Thank you, Chris. I appreciate it, bud.
All right. Take care, guys. Bye.
All right. Take care. Bye. All right, guys. Any other things you want to talk about with me? FRI related stuff. Let's hear it. All right, cool. We are setting up an award ceremony. We'll be doing that. We'll be announcing that soon for the 2022 awards. So that's exciting. And what else can we, what else you guys want to talk about? Nothing. Okay. Going once. Get this thing started. Going twice. This is your last chance to see me. There she is. Yes.
No,
Sonia.
I would like to see your, to hear your opinion in regards to that. I know, you know, it's hard. I know that rates are correlated to the 10-year bond and oh my God, the 10-year bond and the interest rate and the, oh my God, and the inflation.
Yes.
So, but I know there are other factors. I wish I was an economist, right? But I would like to hear your opinion. I know Movement Mortgage also said that they have a program where they say at the end of this year, if the interest rate goes down, they can refinance almost like for free, that he was saying. So if a mortgage company is doing that, it also see, like, I'm pretty sure they saw some or study some patterns, and probably the refinancing is not going to be that high, because if not, it's going to cost, you know, it's going to be a high cost for them to do a lot of refinancing. So in my mind, I'm thinking that probably the interest rate will stay high for at least 1 year. So what are your thoughts?
Okay, when they say there's no cost for refinancing, they mean they're not going to charge you anything. That doesn't mean you have to pay for appraisal and this and that. First of all. Second of all, if you said to a client, I will sell your house now and help you buy one for free in the future, I mean, would you do that? Maybe you would, maybe you wouldn't. A lot of people would, just to get the business, right? Otherwise, they're going to use somebody else, right? So that's what they're trying to do based on that. Otherwise, they don't know. I don't know. You don't know. You don't want to be an economist. You want to be a salesperson, because a salesperson doesn't need to guarantee interest rates or anything else. You've got to sell. You've got to make people feel good about what difference does it, I mean, it makes some difference, but what think about telling a buyer interest rates are going to go down. Well, they're going to say, well, just wake me up when they do, right? Come back and see me, make an appointment, wake me up later. You've got to get them going on something else. And that's why I put these in the chat. I put those historic interest rates. I just picked I didn't cherry pick those years. Somebody else picked them. It's every 4 years. I just Googled that in 5 seconds, and it came up. I put historic interest rates year by year, and it came up. Right now, we're at 6.75, 7.25%, somewhere right around 7%. And look at those things. We haven't been that high since 2003 or something like that. Okay, so is it likely that in the next couple of years it's going to come back down in the 4s or 5s? Probably, right? Maybe, maybe not. May go up to 18 for all we know. But if it goes up to 18, you'll be glad you bought at 7. So, you know, either way, just yeah, don't guarantee interest rates. Don't try to play economist. Don't try to play attorney. Don't try to play anything. And I will tell you, when people ask me my opinion, I'd say the same thing. I don't know. Doesn't look like inflation's really going down. It's going to slow down, but it's still up tremendously. I don't know about the bond yield. I don't know. I don't know where that's going. Inversion of it, he's saying that it means it's not directly correlated. So that makes sense that it's not directly correlated. But what does that mean? I don't know that that's ever been a good thing. It's always been an indicator of recession. But with recession comes the Fed lowering the interest rate. Does that have much? How much does that have to do with mortgage? A little bit. So I don't know. I don't know anything. There you go. Go buy and sell houses. I mean, that's what you got to do. And you've got to get across to people. You've got to create urgency through other means. And that's just going to be an objection you're going to overcome. But weren't you, a year ago, weren't you overcoming the objection from buyers that these sellers are just going to rake us over the coals? These sellers are going to want to, you know, first of all, the prices are way too high. These prices are insane, guys. These prices are insane. Remember that a year ago? You guys you had to struggle with buyers to buy then. At least interest rates were good. But what if they paid too much for the house? You know, what if whatever, right? That's something that stays with you forever. These interest rates you can refinance. You can't refinance out of paying too much for a house. All you can do is wait for the price to go up. So there's always going to be an objection, and you just got to sell through it. There's, you know, Chris did mention very early on that it's a good time for buyers right now. It's a good time for sellers right now. And that's exactly what I always tell you guys. Interest rates going up, you better buy now. And if you better buy now, then you better sell now, right? Because that's where all the buyers are going to be in the market. Interest rates going down, you better sell now, you know, so you can buy something else. There's always something to sell people on. You just got to find out what moves them. And there is no replacement for just learning salesmanship. You are not a glorified tour guide of whatever town you live in, right? I'm sure Daryl knows Williamsburg inside and out, and he could show me all around, but that's not what his job is. His job is to get me to buy a house or to sell a house, right? So he's got to use salesmanship. We all do. All right. Any other questions or comments? What do you guys think about that? I mean, am I crazy?
I think that what you said, it makes sense. And actually, sometimes we ourselves try to look way too deep in little things that sometimes people are not even seeing. I don't know, look into something else. Like I said, if the interest rate is high or if it's going up, there's other ways to sell people. You don't always have to, I mean, you can overcome that, but you can tell what if, but nobody knows. So what if the interest rate doesn't go down and then you lose the opportunity? Before, people were paying a bunch of money, a lot of money up on the prices and the interest rate were low. So at this point, at least you can offer and pay more equal money for the house, and you can always refinance in the future. So I don't know, don't be too analytical into this because it won't get you anywhere. And people, I don't know, people like to buy houses anyways, regardless. It's up to you how you're gonna present it to them.
I'm telling you guys too, and I love that, Romina, we're going to talk about that. I'm telling you guys too, you're going to end up in front of FREC if you start telling people, especially in writing, that interest rates are going to come down. You're going to end up in 2 years in front of FREC because interest rates never came down. Or you told them interest rates were going to go up and they better buy now, and then they never went, you know, whatever it is, if they're unhappy, they're going to end there. But I want to talk to you guys about this. And Romina, I love what you do. Romina sells, I don't know if you guys are familiar with her Instagram. You need to be. I know she's talked about it on here before. She's linked it on here before. You guys need to be on her Instagram. Follow her on Instagram. Romina, if you don't mind putting your handle in the chat. Romina does videos, and I see them all the time. She is busy with these videos, and I love them. It is she's selling the sizzle of a house. She's selling what is, guys, houses are not the house that you live in is not necessarily an investment. You know that. You're not selling, you guys aren't selling stocks and bonds. You're not selling investments. You're selling a place to live. It's like a car. It's not an investment. It's an expense. The house that you live in is an expense. You're paying all that. If you're paying cash for a house, maybe you can call that something, but that's what you have to pay to live. Whether you rent or own or whatever, it's a little better to own, obviously. We all know that. We've all given that speech before because it's true. But the place you live is an expense. You think you can buy your house now and you sell it 3 years from now for $100,000 more, but count the money that you put into it, right? You spent a lot, you paid a lot of interest, you paid a lot of taxes, you paid a lot of this, you paid a lot of that. Guys, it's not, don't look at it as an investment. You're selling a home. You're selling a dream. You're putting them in the picture. You're selling them something. You're selling them where they're going to raise their kids or where they're going to retire or where they're going to die. Whatever it is, that's what you're selling them is to, I mean, honestly, if you're selling retirees and they're buying their last house, they're buying a lifestyle for the rest of their life. That's kind of a big deal, right? Do they need to be worried about as long as they can afford the payment, do they need to be worried about anything? Or as long as they can pay the cash for the house and they can afford the taxes and HOA, do they need to be worried about that? Leaving what they're leaving to their kids and all this stuff? I don't know.14 that out. But mostly they're just buying a lifestyle. They're buying a school system. They're buying a big backyard. They're buying a crimeless neighborhood or closer to a crimeless neighborhood. They're buying a neighborhood. They're buying an area. They're buying Williamsburg, Daryl, just like they buy downtown from Daryl. They're buying a certain area. They're buying a certain lifestyle. They're buying a home. And Romina shows them that home. And I love those videos because she shows them homes. She shows them how nice the place is. She's not talking them into interest rates and stuff like that. She lets them know their loan programs available and all that stuff. But she's selling them on a lifestyle. And that's what you got to do. That's what selling is. Selling is a transfer of emotion. And you got to get them emotion. Yeah, sure. There's fear of loss and hope of gain. Those are emotions too. And that's where the financial talk comes in. And that's where, oh my gosh, I can get this for 20,000 under asking. That's great. That's where they think something great is going to happen there financially. But where they're really moved is, do I want to live here or not? You guys have looked at houses for yourself. And I don't care how good of a deal it is. If you don't want to live there, you don't want to live there, right? I got great deals out in the middle of nowhere. And who wants to live there, right? Some people might, but most people don't. That's why it's the middle of nowhere. So just think about that when you're working, when you're making videos, when you're doing all this stuff. Don't try to be an economic guru. Don't try to be an attorney. Don't try to be anything else other than what you're licensed to do and what you're an expert at. Use your expertise to make money. And you are an expert at doing CMAs. So find out what the property's worth. Know what your job is to know. Don't just be, selling this lifestyle, but sell the lifestyle and know what your job is to know. And you're an expert. And you're selling, and they think that you're selling them as an expert, but you're really moving them emotionally, which is great. That's what you want. That's what they want. They want to buy. Nobody wants to be sold something, but everybody wants to buy something, right? You go into a store, and I love this example. I got this in a sales training one time. You go into a store, and somebody comes up to you and says, "Can I help you?" No, just looking, right? You're not looking. I've never been going just looking in my life. Some of you guys probably do, but I've never gone just looking in a store in my life. I'm looking for something, but I don't want somebody to sell me on something that I don't want. I'll find it. Just leave me alone. Everybody wants to buy. I go there wanting to buy something. Nobody wants to be sold something. Don't sell me anything. Just give me what I want, right? I'll ask you for what I want. So that is exactly the way people buy. They don't want to be sold. People hate high pressure salespeople. People hate this and that. They're not even going to know because you're just presenting them with facts and you're showing them this and you're putting them in the picture. They've got 3 kids. Look, this is where the other people's kids play soccer. This is where they play, whatever, right? This is where little Johnny was doing this, doing that. You can see where the kids play. You can see where this happens. You can see that happens. You guys had mentioned that you really wanted some good schools. This is, this one and the last one we saw are in the A-rated school district. Whatever it is, you got to know your stuff, right? But you're selling them on a lifestyle. Okay. Angie's had her hand up. Yes.
Good morning. So yes, I agree with what Romina was saying earlier, and I agree with you too, Ryan. I love Romina's videos, and I listen and watch them, even though they're in Spanish. Even the Spanish ones, I don't speak Spanish, but I still love them. So great job. I also wanted to propose, because I have some friends in other states that are agents, and they were telling me that they're doing a CMA a day contest with their brokerage. So I don't know if anybody wants to get on a little challenge, but I'd love to start one and manage it if you need to, of doing sending out a CMA a day to either a current prospect that you have or a random person if you don't have a good database. But I've been seeing some good results from this. It's just a really quick 1-page thing. Everyone can kind of share their ideas of different ways of doing it. But I usually do just a 1-page thing with like 3 nearby neighborhood comps and a range of values for that neighborhood. And then of course, like a call to action to, give me a call for your real, true, accurate value of your home. So I've had good success with them in the past, and I know some other friends that are doing like competitions. So anybody here competitive like me, definitely push me to do more if everybody else wants to compete. See how many calls we could get or appointments, however we want to kind of measure it.
That's a great idea, Angie. Actually, a really good friend of mine, my BFF that works for Compass, is doing exactly that. She's sending out CMAs to every client that she's sold, and she's been in the business for like 10 years.
Yeah, just start at the beginning, start at your first one.
Yep.
And go from there.
She's going through a list, and she went back 10 years, and she's sending it CMAs to every freaking client.
Yeah, it works.
I know about it because she called me up and said, "Hey, we worked with these 2 clients together. Do you mind if I send them out? Because or have you already?"
Yeah, that was nice. It's nice of her, very professional. Yeah, I've seen them working, and I've heard a lot of other agents that have had good success from that too. So I'll share one of mine on the Facebook page, and then everybody can kind of go from there. We can maybe set some challenges in place to really get 1 out a day. Maybe 5 days a week, so 25 days, 25 in a month. Can't be bad.
I'm going to give you guys a little bit of a pointer here. Any of you who aren't outselling Angie and Daryl, which is most of you, pay attention, get involved with what they're doing, find out what Angie's doing and take advantage of it, learn from it. If you're struggling, I know this is a hard business. This business, I tell people this all the time, and some of you, when you joined and you met with me, we talked about this. This business is the best business in the world if you're good at it. And it's the worst business in the world if you're bad at it. And we've all been good and bad at it. And so we all know that paralyzed feeling where the bills keep coming in. February is over. It was only 4 weeks. The same bills come no matter what, right? I guess maybe your electric bill's a little lower. So, but you get all the other bills are the same, the mortgage is the same, everything's the same, and the month runs by fast, and you're just sitting there a little bit paralyzed because I don't know what to do. I don't know how to grow my business. I don't know what to do. It's been a while since I got a check, or it's going to be a while until I get another check. Guys, just keep working through it. Learn from people who are offering. Thank you so much, Angie, for that, and Daryl for your input. You guys learn from the folks who are offering, the people who are doing it and doing well with it, and learn from them. So that's all I'll say about that. But Angie, I look forward to seeing that on our Facebook page. Those of you who aren't on our Facebook group, contact Jari and she'll send you an email to join our Facebook group.
Something I just ordered, yesterday, the day before. I think they're being delivered either today or tomorrow from Prospect Plus. It's postcards. And I did a property update for my community. I'm only sending out 200. I think it's 230, and it's costing me like 180 or something through Prospect Plus. It's a postcard, and it shows everything that's sold within the last 30 days in my community. And actually, I usually do this on Facebook. Not my Facebook page, but other people's Facebook pages that have like 1,500 people on them. So I send this, and I put it on every month. On her Facebook page. Actually, there's 3 of them here, so I put them on all 3 of them. But this time I put it on postcards, and I'm sending 200 out this month. I'm going to do that probably every 2 or 3 months now, just to get my business going again for the new year, because it's kind of slow right now. I'm not doing enough listings, and I need to get it going. So that's what I decided to do, some new postcards with the updates.
Awesome. Guys, and this is what this is what you should be using your money for, the money that we don't take. Use it to build your business, use it to grow like that, little things here and there. And Daryl's a good example of this. Daryl uses, and a lot of you do, you try to put together different pieces of your life to build your business on. You get a couple deals a year from this, you get a couple deals a year from that, you get a couple deals, and you keep investing these things that pay you off with a couple of deals. Daryl, if he spends $180 and he gets a deal out of that, how great is that return on his investment? Honestly, he could have spent 10 times that much, and if he gets a deal out of it, it would be a great return on his investment, right? $1,800 if he spent and got a deal out of it, it'd be a great return on his investment. So, yes, thank you. Brian, Angie, and Daryl, I'd like to learn more and see if you have ideas about how to promote CRE, commercial real estate. So Brian's in commercial real estate, guys. Brian is he's a retail guy, and does very well with that. His daughter is in the business now and very interested in using social media for CRE. Yes, his daughter is with us as well. You guys have any ideas on how to use it for commercial real estate? Brian, I'd like to talk to you about that. We can do that sometime, but I'll get some stuff together for you. Any other questions or comments? Romina.
Does anybody heard about the Real Authority? It's a company who does, I've been getting emails from them, the Real Authority. They are supposed to send, let's say you pick a community, let's say Story Lake, and they send postcards, or not postcards, they're like comparables, mail, I don't know, but with only your information. Supposedly you are the only realtor to that specific community. So they give you, you're the only one. I don't know how do you say that, but anyways. Exclusivity, thank you. So you're exclusive to that specific community. I don't know if anybody heard of it.
I can tell you right now, I'm looking at their reviews. Some of the people I know, and they're almost all positive. People got results from them.
Okay.
And I know some of these people, a couple of them.
Oh yeah, okay. It seems to look good, but I haven't done it yet. Sometimes you pick one community. I was looking into Story Park in Lake Nona, and they charge you based on the amount of owners in the community. So if there is 1,000 owners, homeowners, so you pay like almost $1 per mail that they send. And it is every 3 months that they send that mail, something like that. But if you pick a community of 200 homeowners, then it's like $200. But I wasn't 100%, and I was trying to find out feedbacks from people, trying to read the reviews. So I don't know if anybody knew that.
I used it years ago. I did years ago, and it did work a little bit downtown. I kind of prefer a more personalized marketing plan. Because it's like it's very generic. A lot of realtors do it, and actually you're right. Once you get in a community, you're the only one. You have exclusive on that community, so they're not getting a bunch of the letters from other realtors. But I tend to go deeper inside the niche and deeper inside personal branding of myself instead of having a generic letter from them. Although it's good. I'm not saying it's bad. I did get a few deals from it, so.
I think you can do the letter, or they can send whatever you want. So they can do it on their own. I mean, meaning like with the format they have, or you can send them whatever you wanted to present. Let's say if you wanted to make it more personal, then you can send them and tell them exactly how you wanted to send that. I
think, if I remember right, it comes in an envelope and people actually have to open the envelope.
Correct.
Which I prefer a postcard to where they don't have to open. It's right there in their face and they don't have to open it. Because a lot of people just take the envelopes and they throw them away.
That's true. Yeah.
So,
yeah, any kind of mailing, guys, is going to be it's going to be repeat and repeat and repeat, and you got to catch people at the right time, because most people either will go right in the garbage can or they'll open it over. I know I open my mail over the garbage can so I can just drop stuff in there. And when I see stuff that like something I'm not interested in at the time, then I just drop it in there. right? So I live in a townhouse and I get roofers send me stuff all the time. I'm not responsible for my roof. I don't care. So I drop it right in the can, right? But if someone is responsible for their roof and they happen to have a roofing need that at that moment, and they were thinking about getting a new roof, or they think they might have to when they sell their house or whatever, that's going to work. Same for realtors, right? Thinking about moving, thinking about doing whatever. So I'm looking at these reviews, and they're actually pretty good. One guy says, I've been using Real Authority Services doing farming in my neighborhood. And he says what his neighborhood is for almost 2 years. The results have been fantastic, not only because of new listings I've gotten, but also because of my name. The friendly neighborhood realtor is well known now. So he's doing some branding, and he feels like everybody, he goes to the clubhouse there and they call him it's a friendly neighborhood realtor, right? Oh, it's downtown Daryl, right? So whatever it is, you want to get that out there because they think of you. That's a great thing to have out there, to be known as. It doesn't have to be the friendly neighborhood realtor, but whatever it is that you're known as. It's great for people to think that. Downtown Daryl could mean anything, but you need to have something with realtor on it, probably. So he's like the mayor of downtown. Angie, there was a question for you. Do you do fancy CMAs, or do you do the one-pager estimate to where the comps show or something is what?
Okay, can you hear me?
Yes.
Great, 'cause I'm in the car now. What I'm talking about doing is a CMA to someone who is not, I'm not going to do a listing appointment for. Like, it's not a CMA where they called you and said, I want to sell my house and I got to put together all the comps and a comparative market analysis that's maybe a couple pages long on all the data. I'm talking about a quick one-page thing to send out to people who bought a house from me 5 years ago. And or people who have called me and said that maybe sometime in the future they want to sell, but just not right now. So those type of leads, and I send them out. People, when I have an anniversary, anybody who's bought a house with me on their anniversary, I send them out this one that I've already been working on. And it's a one-page document talking about kind of the market in their area, talks about the paragraph sections, talk about the days on market and what that means for, the days on market in their area and what that means for their pricing. And then 3 comps on the side, one picture, the front picture of the house, a brief description of it, the second one, the third one of 3 recent sales, and then an average price point for your house. So a range, based on this information, the price for your house is between 300 and 450,000. I say a pretty big range. And then, for a real accurate assessment of your home's value, give me a call, I'll come out. And see your house and do a quick walkthrough and let you know the current value, no obligation, just to give you the information so you know where you're at with your investment.
Okay. I love that. And Angie also does great videos and stuff, and she's frankly outworking a lot of people, and I love that. So good for you, Angie. That's a great thing to do on their anniversaries. It's a great thing to do to anybody who's inquired of you. I love that. You guys know that Redfin is out sending those automated ones where they go way too high. I think they just do whatever sold near you plus 25% and say, oh, your house is worth 750 and it's worth 580. So they're out there doing that.
The other thing they do, not just Redfin and Zillow, but Realist too. If the house, because I've been doing a lot of expired calls lately, if the house was on the market for a certain price, all of a sudden, all these automated systems think that's how much the house is worth. So if you go from a Realist value or a Zillow value of one price and you go and list the house a whole bunch higher, so let's say Zillow says it's worth 500 and you go list it for 600, all of a sudden that estimate goes up. Even though nothing happened other than a listing price that I made up, it got on the market. And somebody had an expired listing and they listed it at 700,000. And the owner now told me she thought the realtor overpriced it, that she thinks it's worth 300,000. And I'm like, that's a very big difference. But because they had it listed at 700,000, which is way above 300, 400 grand, more than twice as much. Now the Realist value and all the Zillow and Redfin, all those values are showing that it's worth closer to 700 when there's no way it is. There's no other information to back that up other than a previous list price. So it's just more data.
Do they count make me moves and stuff too?
I don't know if they count that in there.
That's great. Just have your neighbor do a make me move for $1 million and
Yeah.
And your estimate, nobody will ever squawk about your estimate.
Value.
Yep. You guys know how to make sure your estimate doesn't show up, right? Everybody knows how to make sure his estimate doesn't show up for when people look at your listing on Zillow. If you have any question on that, now would be the time. Any other questions or comments? And that's for people whose listing is above whatever this estimate says it is. If you're asking prices above that and you want to get rid of this estimate because they are so horribly inaccurate, then I can tell you how to do that. A lot of people here know that. You can ask on Facebook if you want, but I can tell you right now. So any other questions or comments before we go? Yes, Romina.
I tried to put all my questions.
That's fine.
If I do have a listing for rent, it's a rental listing, and the owner of the property doesn't want to allow dogs or pets in the house, what happens if somebody who's trying to rent the property has a service dog? I know that you have to accept it, but how can I manage that? Because the owner doesn't want a pet. So I don't know what to do in that case.
I will let you talk to maybe talk to Tina or somebody in my office. I've answered some questions recently about this, and you do have to accept them. You do have to waive any pet fee, stuff like that. I don't know if you can ask up front on the application or not. I don't know some of those rules, but I'll put you in touch with Tina in the office, or ask Carissa for you. She knows all the rules, obviously.
You know that Tina, I'm sorry, but she never answered the phone. I've been trying to give them already like three properties to manage, and I gave up. I even gave the number of her office and her extension to a client to put it for rent. Never answer the phone and never answer my client, so I gave up with them.
Okay.
Seriously, it's been so hard for Florida Realty Investment Properties, especially property management office. They never answer the phone.
Okay.
I had a bad experience with my clients too.
Okay.
That's really bad to say it, but I have to say it because I tried to contact her many times.
Okay. I'll talk to Carissa for you.
Yeah.
And find out about the service animal. So your question specifically is, they have a service animal.
If they do have a service animal and they wanted to rent, but the owner of the house specifically said no pets allowed, there's any way to tell this family not to apply? Because I mean, I know it's impossible, but I mean, I understand what it means, but how can we as realtors?
Oh, so they haven't been accepted as tenants yet?
No, they wanted to
apply. They haven't applied yet. So they told you up front they have a service animal. Because a lot of people don't tell people until after they've already applied and been approved.
Oh no, they said it. They said it before. So
well, he can. I mean, it's kind of hard to prove. That's why if he has multiple applications, it's hard to prove. That's why he didn't accept them. I don't know, but you're not supposed to. I'm sure you're not supposed to. I don't know if it's a protected class. I'm sure you're not supposed to discriminate against them, but
I know it's a federal thing, but I didn't know how to say. I mean, if you're in between the owner of the property, obviously you wanted to rent these people, and if they qualify, obviously you should. But on the other side, the owner said, "I don't want any pets. I don't care."
Well, run it by the owner doesn't care. They just don't want any. They don't want any animals there whatsoever, and they don't care about renting it out. Then this will be it. But I'll get the answer from you.
Thank you. Thank you.
All right. Any other questions or comments before we go?
I was just going to say, Romina, this is Dwayna. I'm in the office quite a bit, and if you're having trouble submitting an application for rental, just let me know. You can always, send it over to me, and I'll walk it right over to Tina if you need me to.
Thank you. Thank you, Dwayna.
Thank you.
Any other questions or comments before we go? Going once. Going twice. All right, guys, have a great week. I will see you next week, and keep up the good work. We'll be making an announcement about our awards, and I can't wait to see you all there as well. Bye, guys. You're all going to have to leave. I'm not the host today. I don't know why. You're all going to have to leave on your own. Bye-bye.